Let's jump right into it. Tyler spelled out the topic of this conversation very well, finding hidden gems when it comes to value stocks. Let's start there. The markets are trading pretty close to highs right now at an elevated valuation, the S&P at about 23 times. We look at this kind of market. Does that concern you that valuations are so high and the markets are trading at such a high, or is there still value to be found?
I'm worried about the overall market, especially the S&P 500. You know, I think it is extremely expensive on a historical basis, extraordinarily expensive versus small cap value, one of the largest gaps in history. And of course, the amount of bullishness out there, investors' intelligence data showing everyone's enthusiastic about the markets, individual investors are piling in, everyone thinks they can get rich quick. So it's really a sign that we're getting toward a top in the large cap growth indices.
I also want to pick off where the last conversation ended, a new administration starting in January. Do any of their policies, whether it be potential tariffs or just a more protectionist economy, does that change the thesis at all when it comes to a value investor like yourself?
I think it's helpful for value investing. As we're already seeing this week, a lot of M&A is happening. You know, we see Omnicom pairing up with IPG. We see potentially Mondelez might be buying Hershey. I see Walgreens is popping on possible transactions. Everything is happening right now because people see an environment that's going to be less and less regulation. Lina Khan presumably will not be in charge of the FTC. We know there'll be changes in other regulatory leaders. And that's been a real sluggish, it's been a sluggish time for M&A because people have been so concerned about getting caught up in the regulatory morass. We think that's going to be really going away, and all of a sudden, people will be buying each other again. Companies will be going private. It'll be a much more transaction-friendly time in our economy.
Let's get to some indices and stocks that you like, John. You and I were talking before this. One area of the market that you like very much is the Russell 2000 Value Index. Now, according to LSEG, if you take away negative earnings, it's trading at about 16 times forward earnings compared to the Russell, if you take away negative earnings, trading at about 20 times forward earnings. When we're looking at that sector, obviously there's a discount when it comes to valuation. But in your mind, what else is attractive?
Well, within that sector, you know, there are more and more bargains because people are not fishing in that fishing pond today. It's not sexy to be looking at the undervalued, smaller, mid-cap names. So I just came from Analyst Day here in New York City and had a chance to watch Smucker's present. And, you know, Smucker's is known for their jellies and their jams, Uncrustables. They've got, now they have Hostess products. So if you like Ding Dongs and Ho-Hos and the cupcakes, you know, they're the place for you. Good, solid, high quality, undervalued security, selling about 11 times next year's earnings. Should be solid no matter what happens with the economy next year. You know, another great consumer brand that we love is Mattel. You know, they've got such great brands too with Hot Wheels and American Girl, and of course Barbie, which is so iconic, and traditional Fisher-Price products for younger kids. And it's also well positioned at around 11, 12 times next year's earnings. A very, very cheap stock with extraordinary IP and the ability to make more and more movies out of that IP.
I want to get to one area of the market that you're very bullish on right now, and that's anything touching the consumer, but particularly gaming. I know Boyd Gaming is one stock that you like. What is it about the profile of this company in particular that you see opportunity in?
Well, Boyd we like because they have really great, you know, access to the markets in Las Vegas that go toward the people who actually live in Las Vegas. You know, their casinos are in places where the town people come and enjoy kind of low-price gaming, a different atmosphere than the Strip. They also have well-positioned casinos throughout the United States in various states. And they're very involved also in online gaming. That has been a real boon for them, and it's something that we think as they think about online gaming, they're really, really well positioned in sports gaming and having sports books all around the nation. Boyd's very, very conservative. They have an extremely strong balance sheet, especially for a casino operator. So it's something we have a high degree of confidence. Just met with management a couple of months ago. Their confidence is just building.
Okay.
They've been buying back a ton of stock, which we also love to see. So quite enthusiastic about Boyd Gaming.
You mentioned you're a bit of a contrarian investor, so you told me about another area of the market that you like that seems contrary to your general thesis. That's the alternative asset manager, stocks like KKR. Where are you seeing opportunities there?
Well, you know, I've been fortunate to have a chance to serve on a number of investment committees, and you know, I'm currently on the University of Chicago Investment Committee and very involved in others. And it's just interesting, as you know, over the last 20 years, more and more endowments, more and more pension funds are comfortable investing in alternative assets, and KKR has been a prime beneficiary of that. But at the same time, I look at companies like Carlyle that are smaller. They're doing really well. They presented today on a road show, and their CEO was very, very bullish on the opportunities coming into private equity. I think Carlyle will really, again, benefit from that. And the investment bankers that service those private equity companies like Lazard, we know they're doing extremely well. The momentum is behind them. They've been announcing good earnings, and every time you talk to someone there, they're saying investment banking is coming back because all these transactions are happening again. And people are so excited by the opportunities to do business in many different ways in this recovering economy, in this new environment where there's not going to be as much regulation slowing down the deals, whether it's going private or doing a strategic transaction.